on SA 600. Uh, I think thanks for joining in large numbers, and I think to make this program a success. SA 600 has been the standard and auditing standard for quite some time, but I think the topic has got a very good traction after this NFRS circular, re-emphasizing or reiterating the importance of this standard as well as the responsibility of the group auditors. Of course, SA 600 revision is also on the cards, and NFRA has invited comments, and now it has been possibly sent to ministry for its notification. And I think the applicability will be from 1st April 26. But from a chamber's side, we thought it fit as to understand our present SA 600, what are the current responsibilities, how we should enhance our further procedures regarding this, and how ultimately to gear up our responsibility when the revised SA 600 comes into the place. With this in background, we thought that today would be the right time to discuss and deliberate around this topic, and we could have not got a better speaker than Milan Bhai for this topic, considering his vast experience of auditing background for almost more than 2 decades in auditing field. With this and without spending much time, I will ask Deepak to introduce today's speaker, and then we can start the session. Deepak.
Yes. Thank you, Tejas Bhai. It's a pleasure, introducing such a speaker. So, CA Milan Mody is basically a reputed chartered accountant with the practice of more than 27 years. He is definitely All India ranker. He has expertise in statutory audit, management audit, etc. He is managing partner in Anisha and Associates LLP. He has made more than 65 presentations at various forums on the similar topics. He has been technical reviewer of annual reports of ICI awards on excellence in financial reporting. He has co-authored publication by Taxman and CTC on Caro 2020. So our today's speaker is a perfect blend of, is an author, knowledge bank, and full of experience, and the best, package to have on this subject. So with this, I welcome Milan Bhai. The stage is yours.
Thank you, Deepak. Thank you for the kind words. Thank you, Tejas. And I think one thing which Tejas mentioned is very relevant, that it has got a lot of attention in the recent past. I think consolidated financial statements per se have become more important than standalone financial statements in the last decade. 10, 12 years back, we had more of standalone financial statements, and consolidated financial later on became mandatory. So it is bound to happen that the consolidation, if it is more relevant than a standalone, the audit of consolidated financial statements or group financial statements, which we say, has to have more relevance and has to be given enough importance vis-a-vis the audit report of a standalone holding company. So I agree with Tejas's view that this is going to stay, and not only stay there, but this will further get reinforced once SA 600 gets into action. I have prepared a presentation, so I'll share that. And is it visible?
Yes.
Yes.
One second.
Yes.
Yeah. Okay. Yeah, I think it is just jumping. Give me a minute. Yeah, so I think what we will cover is obviously the NAFRA circular to some extent. We will cover the SA 600 as it presently is. We will try to cover what is the revision which will happen in SA 600. We will also see why there is a need for this change, and what is the thought process behind the change, and how will it impact all of us. So the contents of today's session will be the background, SA 600 revised, the audit procedure, which is practical application and guidance, and the implementation related challenges. My slides are moving, right?
Yes, yes.
Okay, yeah. So, I mean, we all know that certain years back, Narendra Modi did mention that he wants to create a large CA firms in India. And I think if the Indian CA firms also have to think big and become large, they need to play that important role in building the financial and the economic infrastructure of this country. So what has been the triggers of the change? The NAFRA observations in case of DHFL, RCL, RHFL, which is the Reliance Housing and the Diwan Housing, and ILFS, there was a huge fraud. And NAFRA, when it went further into the details of those frauds, that was also one of the trigger for this change. Significant reliance was placed by the auditors of these companies, the holding company auditors, when they were consolidating the component while preparing the consolidated financial statements. The way the current SA 600 was interpreted, implemented, and understood, there was a challenge, and that led to this change. And obviously, ISA 600 got revised, and I think December 23 or 24 is the date when it has become mandatory. And same way, SA 600 also got revised, as Tejas rightly said. It was open for public comments, and now it is expected to be mandatory from 1st April 2026. That's come in some of the press release by NAFRA. What is the responsibility as per the existing SA 600? So let's understand that. Planning the audit to include work performed by other auditors. So when you're doing a consolidated or a group financial statements, obviously it's possible that you are the auditors of the holding company, but the subsidiary are not audited. Subsidiary is still easier. Wholly owned subsidiary is much more easier. The difficulty starts when it comes to joint ventures and associates, because in an associate, the holding company's share is limited. It is between 20 to 50, as we generally understand. And at that point of time, the other shareholders may not want to prefer the same auditor. And that's where there is bound to be a different set of auditors for the holding company and for the associate company. One thing which came to my mind is, why is there no rule to say that the auditors of the holding company will compulsorily be the auditors of the subsidiary company? But I think, as I said, for joint venture associates and even for non-wholly owned subsidiary, there could be other considerations, and to make that compulsory may not have been possible. Because if it is made mandatory that the holding company auditor will also audit the subsidiary, then automatically some of the issues which are there may get resolved, but it may not be a level playing field for smaller subsidiaries being audited by different auditors other than large firms. So I think, though it crossed my mind, I have discarded that idea that could government have thought on those lines or not. Uh, Determine the materiality at the CFS level. That's what is the present responsibility. Communicate that to the component auditor. We all are familiar with group audit instructions. The group audit instructions will typically talk about acknowledging those instructions, independence. It would talk about materiality. It would talk about informing the principal auditor about key developments in the key events, like an audit closing memorandum. So this is there even today under SA 600. What it also requires is obtaining sufficient and appropriate evidence regarding the work performed by the component auditor. Consider the findings of the component auditors while forming the opinion on the consolidated financial statements or group financial statements. Somewhere it is implied that if the auditor of the component or the subsidiary or joint venture or associate is a member of a ICAI, then there is no need to evaluate the competency. Now, this statement has obviously been challenged by NAFRA in its circular, saying that though it says that for others you should uh, do the competency test, it does not necessarily mean that if it's a member of ICAI, you do not require to do a competency test. So I think this is where we are presently. Everybody is following group audit instructions. There are timetables which are there, the subsequent event report, the tax litigation reports, the various key elements are being sought by the principal auditors. So there is a process which is already there in place. So if there is a process which is already there in place, then why the change? And what is the change? Let's look at it as we move ahead, because we all are doing audits of large groups, and where we have come across the as either as a holding company auditor or as a component auditor, uh, going through this group audit instructions and fulfilling those obligations. NAFRA further observed, based on the various reports which it has generated, that there is an inadequate discussion or coordination between the principal auditor and the component auditor. The auditors have failed to assess the discrepancies in the number of components included in CFS and the regulatory filings done by the group. So maybe they would have found that the group comprises a larger number when it is looked at from a filing perspective, but what is included in CFS is a smaller number. There are non-material subsidiaries or non-material components which may have unaudited financial statements, and those are not assessed by the auditor, is what is observed by NAFRA. There was a case where diversion of funds to the promoter entity at component level. However, it was not identified or reported at the group level. Principal auditor stated that they had no obligation to evaluate the fraud risk in any of the group companies. Principal auditor stated that they had no access to the books of subsidiaries audited by the other auditors. Now that they had no access to the books, I think they could have avoided that statement, because Companies Act does provide some of the rights. We will go through that to look at the records of the component also. And even as a principal auditor, they could have extracted more information from the auditors of the subsidiary. So making such a blanket statement or a disclaimer is what NAFRA found was not correct. NAFRA further observed that there is no evaluation of internal control by principal auditor and the branch auditors, leading to non-evaluation at group level. So one is internal control at a entity level and one is at a group level. Competency of overseas auditors was not verified. Overseas auditors obviously would not be a member of Institute of Chartered Accountants, and there they did not find out whether they had the right team, right skills, they had the knowledge of the industry. And because of that, NAFRA was not happy with the way the group audit approached the whole matter. There was also a case where two component auditors had resigned due to suspected fraudulent diversion. And in spite of that, there was no specific cognizance of that aspect while doing the group audit. The auditor failed to evaluate the non-consolidation of a subsidiary, which led to a material misstatement. And the principal and other auditors failed to identify false and erroneous understatement of loans to entities controlled by promoters due to unencashed checks, which were as at the year-end date. So year-end, they must have squared it off, but it was lying in the bank reconciliation. And this was not picked up either by the component auditor nor by the principal auditor. So, I mean, NAFRA during its several observations had this, and it felt that there is a gap in understanding, gap in interpretation, gap in practice, gap in implementation. NAFRA categorically mentioned that it feels that there is a selective reading and it's a convenience based reading. And you need to look at all these standards in a holistic manner. SA 700 emphasizes obtaining reasonable assurance and sufficient and appropriate audit evidence applicable to both principal and component auditor level. So even if you are a principal auditor, that does not dilute any of the standards on auditing as far as you are concerned, and hence over-reliance, if I may use that word, was not appropriate as per NAFRA. Auditors to apply the requirement of all essays holistically and not conveniently, and requires the principal auditor to assess the component auditor's work and not blindly rely on the same. So do not follow a very mechanical process. Go into the depth of it. You know, and I'll come to that part again later when you say go into the depth of it. To what depth? And we will come to that as we progress in the presentation. Obviously, there are a lot of standards which are connected, as NAFRA said, that you cannot do a selective reading or a convenient reading. And I think audit quality or audit documentation, audit planning, assessment of risk, as well as the response to the risk. These standards need to be looked at in a overall manner and read with SA 600 before you say that whether work done by you is adequate for the purpose of group financial statements. So if you look at these standards, and I think there have been consequential amendments which have been suggested even in all these standards, making it little more clearer, though it is already there today also as per NAFRA, that if you look at all these standards, then there is a obligation on the group auditor to do certain things. Let's look at Companies Act. I said certain time back that there was this, that they did not have access to the books of the subsidiary. But the act itself gives that they have a right to access the records of all subsidiaries and associates. So rather than books, the word uses records. Brings a lot of responsibility on the shoulder of group auditor. So if you need to read between the line rather than just saying, okay, you should do a job which is bare minimum. Still, principal auditors are unable to exercise their right to access information of component. So that's what NAFRA found, that in spite of the fact that it is very explicitly mentioned that they have access to the records of subsidiary, why would a principal auditor say that they have not been able to get access to information of the component? So this all started, slowly, one after another, it got built up. And on 17th September, NAFRA issued SA 600 revised for public comment. And they, based on representation, I think, or even before the representation, they excluded certain entities out of it, especially, your banks and insurance companies and things like that. So we will come to that. On October 3rd, NAFRA issued a detailed circular. It's a long circular where it analyzed how people are interpreting SA 600 today. What are the deficiencies and gaps which NAFRA has observed? What, according to NAFRA, should have been a more proper interpretation? They have quoted Supreme Court judgments in respect of shall and may and should and all that. So it's a very detailed circular, and it goes on, taking examples which we saw earlier and which we will see later, and making it little more amply clear that the principal auditor or the group auditor cannot take a shelter under the SA 600 and say that they have relied on the work of the component auditor, and hence nothing further needs to be done. So I think in essence, the whether I, again, because of choice of words, I can say the myth which was there, that if the auditor of the component is an ICI member, that they shattered, and they came up with the guidelines of what are the responsibilities of the auditor. On November 12th, NAFRA recommended that SA 600 be applicable from 1st April 2026. So this is the background, and I said that I will elaborate on the depth a little later. We will come to that. But I think what is important here is to understand a change in the mindset, that just because the components are audited does not absolve the group auditor from their responsibility. So there is a mindset change which is required both by the auditors of the group as well as the auditors of the component, because uh, till now, based on the language and the practical implementation, it so happened that there could have been, and I presume this, I am not very sure, that there would have been an ego tussle also between the group auditor and the auditors of the subsidiary, associate, and joint ventures, where the group auditor, even if it says that they would want to be done in a particular manner, the uh, component auditor would still have his own interpretation of how he or she would want to do it. So I think this mindset change is required by both the auditors. Obviously, the mindset change is required even by the company, where they will have to facilitate this. And we will come to some of the challenges and the solution which may be possible. So this is there is an implementation explanatory statement to this standard, and it's quite exhaustive. It covers obviously the scope, objective, requirement, explanatory material as I spoke, and the appendix 1, 2, and 3. Appendix 1 is where you're not able to obtain sufficient and appropriate evidence, then how should you report? It's obviously a qualified report. Understanding the group's system of internal control, and examples of events or conditions that may give rise to risk of material misstatement at the group level or at the group financial statements. The key requirements within the standards are on the quality, acceptance and continuation, audit strategy, understanding the group and the reporting framework and internal controls, identifying and assessing risk of material misstatement, materiality, responding to the assessed risk of material misstatement. So that needs to be changed. It's not ROOM, it's ROMM. Evaluating the component auditors' communication and the adequacy of their work, subsequent events, audit report, communication with management and those charged with governance at group level, and the documentation. So these are the key elements of the standard. And by now you would have understood that it is quite detailed. The explanatory statement is there, appendix is also there. So it is made more watertight, rule-based, and does not leave any ambiguity of interpretation. So the gap which NAFRA observed automatically gets bridged. Objective is involvement of component auditor, responsibility of group engagement partner and group auditor, and professional skepticism and scalability. So it provides a guidance of how the conducting audit of the group financial statements, the SA 600. It has a special consideration that arise in audit of group financial statements, focusing on consistent quality and reliability of the final audit opinion. Because there could be different styles, you need to bring that uniformity. And because of that, there are special considerations. As I said, this is applicable for public interest enterprises as defined under Rule 3 of NAFRA, and presently it excludes PSU, PSBs, and insurance companies and their branches. And the reason they have excluded is because the appointment there is either by CAG or other empaneling mechanism. And hence they wanted to keep that outside, because one representation which was made is that it would be difficult once the selection is based on merit and some criteria which is already there. And I think that is maybe a solution which we can look at, that if there is an AQMM, and if AQMM matures, which is audit quality maturity model, and the firm has achieved the highest level of quality maturity, then in that case, a low quality maturity of the holding company auditor versus a high audit quality maturity of the subsidiary, what happens in such cases? So I think if the selection or there has been other criterias for rating and ranking of firms, whether that should solve some of these issues or not, to have a little better reliance on those auditors. So for example, if you have an auditor who has been peer reviewed, a component auditor who has been peer reviewed vis-a-vis a component auditor where the peer review has never happened, does it make a difference or not, is a food for thought which I would leave for all of you. As I said earlier, 1st April 26 is the date, subject to the central government approval. This is the crux. The group engagement partner is ultimately responsible for group audit and group audit report. As simple as that. If you have a component, you treat that as your extended audit team. You have an audit team, one, and assume that the component auditor is your audit team number two. So the way you would direct, review, and supervise your audit work, the same is what is expected when it comes to the work of the component auditors. So it is to facilitate the group audit and in no way to dilute your responsibility or role. You do not need to give a reference of the component auditor in your audit report unless it is required by law. So that's what is mentioned. And there is a complete accountability, and I remember this story of anybody, nobody, somebody, everybody. You pass on the buck, or you pass on the responsibility from one place to another place. The holding company auditor saying this is something which should be looked by the component auditor. Component auditor says that I had already drawn reference. Now it had to be addressed by the group auditor, what they want to do about it. So, rather than playing that passing the pillow game, this is something which will set right that one aspect of a one person responsible rather than multiple responsibilities. And I think though this comparison chart is very exhaustive, the essence is again the same. There are a lot of areas where SA 600 may not have been explicit or specific. It may have remained silent, but now SA 600 revised very clearly talks about it. So reference of component auditor's report allowed only if required by law, and responsible for forming opinion, but can rely on the work performed by the other auditor as per present SA 600. The auditor who performs the audit work related to the component for the purpose of group audit, the component auditor is a part of the engagement team for the group audit. As I said, you have a team one and you have a team two. So your component auditor becomes your team two. Other auditor means an auditor other than the as per SA 600 presently. Other auditor means an auditor other than the principal auditor with responsibility for reporting on the financial statements of the component, which is included in the financial information audited by the principal. Here, let me take a small pause and say that, in my personal experience, I have had where a Big Four is the auditor, and as the auditor of the component, we are required regularly to log in to their platform and submit our working papers. So forget whether they have access to the working paper or not. You have to follow their working paper format and you have to upload it into the software which is utilized. It's obviously a cloud-based software, and it is quite tight and protected because the engagement partner's mobile number is where the OTP is received. So you log in with that OTP, and based on that, and if you have not submitted, a reminder will go. And you can also review whether you have submitted all the papers which were required by you. So whether your planning document, whether your observations, whether points which you discussed with the management, your uncorrected, unadjusted items, errors which you found, all that in the specific format is something which needs to be uploaded in the platform. and they will send you reminders. Significant and non-significant component, responsibility of group auditor, not mentioned specifically. However, it could be interpreted that group auditor's responsibility was based on the combined reading of the auditing standard, which NAFRA says. Professional competence and capability of other auditors. Here, the group engagement partner responsible for this assessment. So even if the other member is a member of ICI, you still need to evaluate whether they have the capability and the competency and the experience which is required for the purpose of the audit, which is done by by the component auditor. In SA 600, it says that required only, it doesn't directly state that, but that's the interpretation, required only when other auditor is not a member of Institute of Chartered Accountants of India. Component performance materiality, group auditor's responsibility, there is no specific requirement, but practically I've seen that even under present SA 600, the group auditor does share the criteria for the materiality level, and generally the materiality level at a component level would be lower than at the group level. Leadership and the overall quality, it is the engagement partner at the group. Though not specifically mentioned, it can be interpreted even under SA 600 that it is with the group auditor. Sufficient and appropriate resources, including sufficient time, again, responsibility of the group auditor. Direction, supervision, and review is what I said earlier, is with the engagement partner. SA 600 is slightly silent and leaves it open. Sharing of working papers, specific requirement to review working papers of component. And when it comes to SA 600, there is no specific requirement, left to the judgment of the engagement partner. So if you see the changes, the way it has been done, it is, you are trying to do away with over judgment, being little more objective about it, being little more explicit about the rule. Though combined reading obviously required you to do that, now it is spelled out clearly. So you cannot escape the responsibility that as a group auditor, though you may rely on the work, the responsibility finally vests with the responsibility does not shift from the group auditor to the component auditor. Shall we go ahead? Deepak, are we fine till now?
Yes. Yes.
Yeah. Okay.
Yes.
I think there are some points in the chat. We will take it up later only, right?
Yeah, as per your convenience. Or there are some few questions and some in chats as well.
Yeah.
So if you are comfortable taking it at the last, we can do that way.
I leave it to you. I'm okay either way. If we want to break the monotony of a monologue, then we can take it now or we can do it later.
I think there are 2-3 questions. If we can just take it right now,
Sure,
then
sure.
we can proceed further.
Can you
Yes,
narrate?
yes, definitely. One question is, since now the SA 600 is recommended by NFRA with effect from 1st April 2026, should the NAFRA circular dated to 3rd October 24 be complied with for financial year 24-25?
Yes, it should be, because these two are separate things. And what NAFRA circular is saying is the interpretation of the present SA 600 also, the chartered accountants or the auditors have diluted significantly. So in the spirit, if you look at SA 600 and revised SA 600, yes, there is a difference, but in spirit, both are saying the same, that you have to use your judgment to see whether the component audit is done correctly or not, and whether you obtained all the assurance which you wanted. So I think rather than going into the approach that because of the new standard, this circular is superseded, I don't think so. We should take the learnings from the circular and implement it to the extent possible.
Next, some people have posted in the chat box. I would request everyone to put it in the Q&A tab. Meanwhile, I'll just take up this few. How should the consolidated financial statement be approached by an Indian auditor where the overseas subsidiary is not audited under the foreign laws, or is audited but as of a different year, say calendar year, instead of financial year end? mostly in the cases of US, I think this happens.
So I think it does give you a option of a 6 months difference between the cutoff of the holding company versus the subsidiary. So if it's calendar versus financial, then you have to use and keep on adjusting that item every now and then. But practically, I've seen that even there, they request additional 3 months data, and so 9 months could be an audited figure and 3 months could be an unaudited figure. Now, if it is not audited, then you will have to insist that some sort of an audit happens of those financial statements if it is a material subsidiary. Even especially if it is a listed entity, then there is a requirement that 80% of the numbers which are there should be represented by audited financials rather than unaudited financials. So I think uh, there are three things which I am saying. One is the standard itself gives a certain time frame between the subsidiary which is following a different financial year, so that should be okay. But practically, if you can do a plus of the 3 months unaudited and minus the 3 months of the earlier period, that would be better. However, if it is a material subsidiary, then getting it audited is the solution, because even the LODR requires the same.
Great. Next is what will happen to procedure in accordance with the circular issued by SEBI under Regulation 33, Sub-Regulation 8 of the listing regulations?
Sorry, I would not know what is the content of that circular. So if they can make it a little more easier for me, of is it the same 80% to be audited, or is it some other point?
I'll just bring that question at a later stage and I'll
Yeah,
tell
yeah.
you brief about it.
Or I'll have to do a search on that circular number to find out. So I'll first complete this and maybe later on we can address that question.
Definitely. And the last question I'll just try to income tax and GST dues payable as reported by a CA, then same to be payable by company LLP or not based on company under NCLT. Then CA has to report any additional on this report or notes. I'm not able to really understand the question.
Yeah, I'm also not able to understand. I think the statutory dues, if it is reported by the CARO report of the component auditor, that also will be under the purview and review of the group auditor. He will have to review that, and accordingly, like any other item, it will have to be reported in the consolidated financial statements if it is material. I mean, obviously, yeah.
I think
Yes,
this being
that's
LLP, I think participant had a view that this being an LLP, they may not be subjected to CARO, and rather than a group auditor has a further obligation is what I think
Okay,
speakers.
okay, understood. Understood. So because CARO is not applicable, but you have to prepare the CARO report for the consolidated, where you have to report on the, there are two paragraphs in the end, that what the other auditors have reported on the CARO of the subsidiary. Now, here, if these are very, very material amounts, yeah, so because CARO is not applicable, the report format could be different, and you may not be able to insist on a the same reporting format. But if the amounts are material, I think they should be reported. Tejas, what is your view?
Yeah, I think evaluation will have to be done
Yeah,
by a group auditor. In
yeah,
case significant amount undisputed dues which has not been paid, so
you will
first
have
of
to.
all get a clarity from a component auditor or maybe component management, and then a
Right.
group auditor can take a view on that.
Yeah, yeah. So I think this is something which will require a discussion. And
Yeah.
what is the reason for non-payment? Is it a cash flow issue? Is it, as he rightly said, if it is undisputed, then and even as the component auditor also can make that additional remark in his report if he wants to. It's not that even if CARO is not applicable, that means those questions cannot be answered if these are material amounts. So first of all, whether it is subject to the component auditor's report's comment or not is something which we should evaluate.
Yes, yes, correct.
Should we go ahead now, Deepak?
yeah,
Or
I think we are done with the questions. The rest we can take at a later stage.
yeah, I think let's style. So practical application and guidance, as I said, So obviously at the audit planning stage, which is the resource planning, uh, look at the competency and capability of the auditor, the team and the personnel which are involved and their experiences, and whether they have the sufficient time available or not. This will be one of the role which the group auditor will have to do as far as the component auditors is concerned. Nature, timing, and extent of direction and supervision of component auditor and the review of their work. So as I said, it's like your extended arm or a team. You have just, sort of outsourced it to another auditor, if I may use that word. And hence, most of the work which you do for your team, it will be of a similar level. Determine significant risk areas, determine significant judgments which are involved. So this is during the performance stage, risk, judgment, and the extent and timing of involvement uh, while the component auditor is doing their work. Communication with the component auditor, it's the responsibility and the group audit for the group auditor to share the expectations, appropriate and timely communication, and the nature and frequency of communication can be determined based on circumstances and case to case. Out of all this, one very important element or very strong focus is the risk assessment procedure to be performed at a group level. Understand the environment in which the company is operating, understand the controls, understand the level of related party transaction and relationship, understand which are the significant components, understand what is the process which is adopted while consolidating so that there is no error, whether there are going concern issues at a component level vis-a-vis holding company or a holding company vis-a-vis the component. Look at the reporting framework as so this financial reporting framework, what they just mentioned, that if it is an LLP, the reporting framework is different than a company, and hence to the LLP the carve does not apply, and hence this question came up. So I think overall uh, a detailed review of the risk assessment has to be done by the group engagement partner. Special considerations when the component auditors are involved is matters relevant for the component auditors, design or performance of risk assessment procedure, financial information of component relevant to the for risk of material misstatement at the group level, and obtain evidence on the risk assessment procedures of the component auditor and whether it is satisfactory or not. So I think one is at a group level, and for that group level, you need to do this assessment for the component auditor and go into the details, both okay, whether there are items which would lead to a misstatement, how is the component auditor performed the risk assessment, how is he identified, or if it is identified, how is it been responded to. The materiality for the group audit, the group auditor shall communicate to the component auditor the amount determined, determine the materiality at the group level first as a whole, component performance materiality to address aggregation risk such as amounts shall be smaller than the group performance materiality, and the threshold above which misstatement identified in component are to be communicated to the group auditors. So there are 3 or 4 things here. First is determine the materiality at a group level, share that with the component auditor, determine the components materiality, look at the aggregation risk, from a group perspective, if there is a smaller amount in one component and another smaller amount in the other component, you will have to use your judgment that two different components having non-material amount, but both put together, if it is material, what do you do about it? uh, determine the component where to perform further audit procedures and the nature, timing, and extent of that. So if you have 15 subsidiaries, 16 subsidiaries, 17 subsidiaries, determine where you want to perform that additional work, whether it is for all or whether it is selection. Determine the basis for significant judgment made and the conclusion reached are appropriate. So go through the working papers of the component auditor. Look at, for example, when you say significant judgment, let's say if it is a warranty judgment or whether it is a judgment for ECL, what is the ECL model which the company has used? component auditors what have they verified, and whether it is in line with what the auditors of the holding company have utilized. In such ECL models and all that, it's possible that the group audit instruction itself will suggest what is the procedure to be followed by the component auditor. And if that is the case, then the uniformity will be automatically achieved. Determine then the consolidation process. Now you need to understand, consolidation is generally done either through a software or Excel worksheet, or sometimes it is done through you enter various items into that software and then try to consolidate. But look at what are the adjustment entries which are there. Adjustment entries could be for the knocking off of profit or knocking off of transactions which have happened in the current year or in the past years. Evaluate the operating effectiveness of the control on consolidation, because you need to do that reconciliation, that what was your opening reserve at a consolidated level, what is the group's individual profit if you add it up, what are the items which need to be adjusted, and then whether it matches with your closing consolidated reserves or not. This test is imperative because there could be adjustments which may be coming from earlier years. For example, if one component has sold it to another component, certain fixed assets, and there was a profit element, while you are consolidating, you will have to eliminate the depreciation on the, first of all, the profit on that sale, and then the depreciation on that differential profit. So, the control over all these items need to be there so that it does not lead to any error, responding appropriately to ineffective controls. The other things which are there, which will constantly be required, is review and revise the group audit instructions based on the experience, need to review the working papers, follow-up meeting with component auditors, increase formal communication, interim review, and the closing meeting. So I've been a case where I am the auditor of a subsidiary and the principal auditor now. Every quarter before the start of the audit and the end of the audit has a virtual meeting with us. It is a Zoom's call, and they record the call and they share their expectation, their points which they would want us to look at. And at the end, they also seek what have been our key findings, which may not have been documented in the formal financial statements. Were there any items which we dropped? And, there is a series of questions which are asked to us, and there is a recording, as I said. This demonstrates that they have done their job of, guiding and directing and supervising the work of the component auditor. And there is a checklist, obviously, which is filled up as a part of group audit instructions. But it's not only the checklist, it's also these meetings which are then recorded. So, for example, if you are the group auditor and you are having a meeting with the like component auditor, some of the questions which you can ask is, are there any unusual transactions during this period? Related party transactions which are first time entered in the current period, major thrust focus areas that was addressed, whether what materiality was considered, major areas identified based on our risk assessment. Did we review the secretarial records and did you review the secretarial records and board minutes? Changes to the manner in which the business was conducted as compared to earlier period. Expense and income heads where there is significant variance, and request to the component auditor to communicate subsequent events up to the date of the signing of the audit report of the consolidated financial statement. So the board meeting of the component happened, let's say, on 10th, and the board meeting of the holding company happened on 14th. So they would seek another report up to the board meeting date of the holding company, where the consolidated are also presented, so that they can take care of that even 4 days between the components financial statement approval and the group's financial statement approval. Yeah. Evaluation of the component auditor's communication and adequacy. So as a group auditor, whether information requested is received or not, corrected or uncorrected misstatements above threshold are communicated, whether there were any deficiencies in the internal controls, key issues which were highlighted, indicate possibility of management biases, key issue discussed with the component management and those charged with governance, like a CAM, what were the CAM? So even if it is unlisted, you would look at what are the key audit matters, highlight instances of non-compliance with law, review additional component auditors' documentation, significant fraud risk factors identified, ethical requirement adhered to or not, component auditors' findings and conclusion, and related parties' transactions not previously identified. So if you see, I mean, there is so much evaluation which is happening on all areas, whether it is specific to related party, whether it is to the risk assessment, fraud risk assessment, whether it is to the issues, whether it is internal controls. So it is a huge exercise which the uh, group auditor will have to do when it comes to relying on the work of the component. Communicate with the management and those charged with governance about the plan, scope, and timing of audit, quality issues with regards to work of component auditors. So, as a group auditor, you will have to sound that component auditors work, whether it is sufficient, adequate, what was the quality of the component auditor, planned involvement in work of component auditor, and matters unresolved at component level, which obviously will have to be addressed at the group level. But these are all the points which the group auditor will have to communicate with the considerations while forming opinion on the group financial statements. Obviously, if you do not obtain the sufficient and appropriate audit evidence, then you qualify or disclaim. If sufficient and appropriate audit evidence is obtained, but misstatement exist, then you again bifurcate between whether it is material and pervasive and material but not pervasive. In one case, it is a qualified opinion. In another case, it is an adverse view. This is, I think we have already discussed about it, that whether a reference of the component auditor is required in the group auditor's report. So it says it shall not draw reference unless it is required by law. So it's a negative statement that in general, you do not need to refer that you have relied on the work of the component auditor. Where law requires reference, it does not diminish the responsibility of the group auditor. And this is something which repeatedly I've been saying, that even if it is a group auditor, and even if you have relied, then it's your choice, but it does not absolve you of your responsibility. In some circumstances, may draw reference of an adequately described basis for modified opinion. In terms of the documentation, document the nature, timing, and extent of audit procedures for significant matters, audit evidence obtained, and conclusions reached at, restriction on access to people information within the group, determine significant component. So these are the points which you will have to specifically document, materiality, your determining the competency and capability of the component auditor, which were the significant subsidiaries or joint ventures or associates, and any restriction. So how do you summarize this? The group auditor is responsible for the overall group audit, even when relying on the component auditor. The group auditor is accountable for the audit and must evaluate the work of component auditor. And wherever there is a component auditor, the risk assessment and design and audit procedures have to be a part of the overall engagement strategy to be done by the engagement partner, group engagement partner. We are coming to the last slide in terms of the practical challenges, and then we can have a few of the questions which we left earlier. Will this mean that there is a concentration of audit work with large firms? In a way, yes. In a way, no. It all depends. I have had an instance where we were the auditors of an NBFC, and the holding company of the NBFC was a Big Four. And they decided to do a complete re-audit of the work which we had done. So they told management very clearly that even if you have an NBFC audit, and there They could not have become the NBFC auditor because of the limit of 8, but they did a re-audit when they did the consolidation. So I think these are some of the things. One of the suggestion which I had given in some of the other client is that, is there a possibility that the auditors of the component become the joint auditor in the holding company, or the auditor of the holding company becomes a joint auditor in the component? And I think that is a good way in which some of this risk can get addressed, and the responsibility also get spread equally. Adherence to different standard for different types of entity. This is based on what I spoke, that certain public interest enterprises are presently not covered, which is your insurance, banking. So you have one set of standard on SA 600 revised, which applies to other than these 4 type of companies, which is insurance, banking, and etc. So that may lead to some difficulty. Sharing of working papers, uh, not proprietary, and lot of efforts may have gone in creating some of the checklist, but you may have no choice but to share it. Substantial increase in the audit efforts and fees, obviously, because of time and effort. Challenges in bank and other institutions not covered in exemption. I think that is already mentioned, adherence to different standard. And challenges in adherence to timelines, because already you are on a tight deadline, and now there is an additional obligation for the component to report to the group auditor, and the group auditor to additionally seek information from the component auditor. So that additional time may put more pressure on the overall timelines. I think I've tried to summarize and cover most aspect of it, though we are slightly early, but I think we have time for questions.
Yes. Should I be starting with the questions?
Yes, yes, yes.
Yeah. So earlier there was a question in relation to SEBI Regulation 33(8). So Mr. Brijmohan has further elaborated it. They have said Regulation 33(8), it's basically statutory auditor of a listed entity shall undertake a limited review of the audit of all the entities or companies whose accounts are to be consolidated with the listed entity as per AS 21 in accordance with the guidelines issued by the board on this matter. It's in relation to the limited review, the guidelines of SEBI. So what would be the status of it after this revised circular?
No,
Okay.
I'm not very clear still, Deepak, because that circular, I'll have to read that in detail. What he's saying is, as per that listed, is he saying that the components also will have to be limited reviewed by the same auditor? Because my understanding is, as I said earlier also, that whatever is getting consolidated, at least 80% of that should be subjected to limited review.
What I can do is I can just ask him to unmute because I've allowed him
Yeah,
to talk.
sure. Yeah.
Mr. Brijmohan,
Yes.
can you unmute yourself and discuss your query so we can get a much more clarity on that? Mr. Brijmohan?
We can come back to that
Yeah,
if you
sure.
have.
I'll just take another query in the meantime.
I think Deepak, I think what he was trying to say, I think in our audit report, consolidated audit report, we make a reference of sub-regulation 8 to regulation 33, whereby even today, we make a mention in our consolidated audit report that I have performed the procedures for reviewing the financials of the component. I think
Yeah.
he's wanting to understand that as in line with the expectations now under SS 600, whether these two would be aligned, or is there
Yeah.
something?
So
Yeah,
yeah, Tejas. So I think it is in that sense aligned. It's not a question of, it's a question of depth of review rather than just review,
correct.
and the extent of the how much you go into if the other person who has done the audit is a member of the Institute of Chartered Accountants of India. So I think principally it is aligned, but the spirit what NAFRA is expecting and what is internationally also now being expected, and what is the SA 600 also saying, is that you cannot do a superficial or on the surface review and then say, okay, I have relied on the work of the component auditor, and absolve yourself of the responsibility as a group engagement partner.
Yes,
Yeah.
correct. Correct.
Okay. Next is several times the principal auditor doesn't get the appropriate support from the component auditors. There is also restrictions on the review of the working paper of the letter. In such cases, whether any disclaimer can be given or how can the principal auditor safeguard his interest in such a situation?
No, so that is where I think the NAFRA's approach is very clear. You will have to enforce your right. Point number one. Point number two, you will have to have the company involved and have that dialogue that why would they not. Three, the circular also, at depth talks about whether the working paper can be shared under law or not. And it says it can be shared because this is coming out of a standard which is a law. And hence, uh, what they are saying is these type of excuses, if I may use the word excuses, are not acceptable, and ensure that you get what. Sorry, was I audible? Because hello?
There's
Then we
some sort of
lost you in between.
yes, yes.
Yeah. So I'll repeat. Yeah, I think there was an internet issue. So what I'm saying is the NAFRA circular does try to address this part, that you should not be satisfied with an answer that the other component is not sharing details. You should enforce your right, which is given as per the standard and law, involve the holding company if required, and ensure you get sufficient and appropriate evidence. Giving this as an excuse is not acceptable, if I use the word excuse, and hence do not get into such practices, is what NAFRA's tone is throughout the circular. Does that
Uh,
does that help, sir? So if the working papers are not shared, you have to enforce. It's my right. It says legally I'm required to see it, and you will have to provide it. If you don't provide, then the information and explanation which is required for your audit as a group auditor is not received by you. Then you look at the materiality and of that matter, and then accordingly you will have to report.
Uh, just to add to it, Milan bhai, rather in this, definitely what you're saying is that we have to enforce our right, but the
Yeah.
discussion can be done with component auditor well in advance. We'll get at
Yes, yes.
least a feel that if he is not ready to support right from the beginning, there should
You
not
can
be
put
any
the pressure
last
from the
minute rush.
company. Yeah,
Yeah,
you can
yeah, we
put the
can do
pressure
the
from the holding company.
audit.
Yeah.
You can directly do the audit of the subsidiary, by yourself rather than last minute rush.
Absolutely, Deepak, you are right. So that's what I'm saying. The you have to find a solution to it rather than use this as an excuse. Okay, because of this, I am not able to do this. Whatever that solution is.
Next is,
Yeah.
should the engagement letters of component auditors contain the paragraph on sharing of work paper to the group auditors and also similar wordings in the engagement letter of the group auditor with the holding company?
Yes, I think this is one question which has come up, and I forgot to mention that group auditors also say that you report directly to us on certain matters. So you address it to us directly. Your engagement letter itself, there will be certain changes which will be required. So what is being suggested by the gentleman is correct. It will have to be in the LOR, in the engagement letter, and all the places the necessary and consequential changes will have to be done.
Yeah. In case of subsequent events, how to take confirmation from component auditor on the same day if components are located in different time zones, considering time available for publishing result, that is 30 minutes. Any practical way out?
No, I mean, I understand what you're saying is your meeting is in the morning, and so see that touch and go situation will always happen. So you have to take what is the best possible considering the time zone. So end of the business day of the earlier period should be sufficient in which case. So that time lag of on account of the time zone should be a acceptable norm according to me.
Is SA 600 revised applicable for private companies and private banks?
No, so today it is said public interest enterprises, and it is excluding those things which I mentioned. So you will have to go by that, whether it is covered. So if I look at my slides again, uh, just 1 minute. So it excludes public sector undertaking, it excludes public sector banks, public sector insurance companies, and their branches. So presently these are excluded. So a private bank, I think should get covered, right? Yeah, it seems that it will get covered if it is otherwise under NAFRA. Yeah, it may get covered. So the only reason those entities have been excluded is, as I mentioned, because the appointment procedure of the auditor is through either CAG or an empanelment, and hence they have excluded it from those entities.
Correct. Whether requirements of SA 600 revised may dilute for non-significant components or shall be applicable to components holistically.
So if it's see again, material and non-material subsidiary, so that materiality concept will still apply.
Yes.
Yeah. And then you can do, so let's say if it's a non-material subsidiary, you may look at some of these procedures on a not yearly basis, but alternate year basis or something like that. So that is your judgment as a group auditor, which you will have to use.
How will conflicts of opinion between holding company auditors and component auditors dealt with in the report?
The holding company's view, auditor's view will prevail most probably. Yeah, because he is finally responsible. He is making a judgment. He is signing the audit report on the group. So his view will prevail.
Any which ways before this
Also,
NAFRA circular on that, they used to take the impact in consolidated financial statements
yes,
directly if they are not of that view. And they
absolutely.
mention it, yes.
Absolutely, you're right. You're right. So it's the group auditor's view will prevail, and they have a discretion. Even if there is an unadjusted item at a component level, they may make that adjustment at the consolidation level.
Yeah.
So let's say there is a qualification that the company has not provided certain things. In the component auditor, they have reported it. When it comes to the group audit, the group auditor can insist the management that I don't want this qualification and please provide for it. Now, whether the client agrees or not agree is a different issue, but those type of things even today are happening.
Yes. Should representatives of client management be part of VC meetings of the group auditor and component auditor?
No.
In case of
No, I don't think so in a normal course, but yes, if there are some specific issues like information not available or what we said, the hesitation of the component auditor to share information, then you can involve the management also, because then it will be smoother. But if it's a auditor to auditor related thing, then the answer is no.
2, 3 more questions are there.
Yeah, please.
If the group auditor mandates, and this is going to be a it's a very good question. If the group auditor mandates the use of specific audit tools, for
Yeah.
example, journal entry testing software or data analytics, but
Yeah.
the component auditor lacks it, how component auditor will deal with this?
Yeah, so there are two things here. I also mentioned that we had to report on the platform of the client. So if the principal auditor is ready to lend you the software which is available with them, then you do that arrangement. So that's a part of the planning and the discussion and the coordination which you have at the initial stage. If you do not have that tool, and if it is publicly available, you buy it if required, you speak to your client also, that this is a requirement and this is the additional cost for it. If you can't buy it because it's a proprietary tool, anyway, you can't do anything. And the third thing is, then let the group auditor do that testing based on the data which you provide. So all three options are available. Either they give you the access to the software so that you can do the testing, you give them the data so they do the testing, and third is you purchase the software and ensure that you comply and you speak to your client to include that in your audit fee cost.
Yes. Whether the group auditor is responsible to check the classification of balance sheet and profit and loss ledgers done by the component to ensure that line by line consolidation is correct.
Yes, yes.
Uh, in case of central auditor of a private bank, how to verify working papers of all the branches?
uh, Working paper of all the branches, you need not verify. Only if you feel, that's why there is a selection, na, how much you want to do. And you may want to select which branches you want to do it. You may do it over a period in a rotation. And obviously, like long form reports and the group audit instruction, that itself should help you. And if you still want to look at working papers, the only way you can do it, as I said earlier also, is that you need to have a platform or a software where they can upload their working papers into that portal, and you sitting in whichever place you are, the scanned version of their working paper is something which you can review. If it's a private bank with so many branches, obviously it's a large audit, right? It can't be a small audit. Sorry, am I clear? So you will have to invest in technology to ensure that the work gets reviewed. Working paper, yeah.
Uh, Next is whether group reporting instructions is required to be sent to different partners of the same audit firm who is auditing a component.
Why two different partners? The signing partner would be one only, na?
Yes,
If there are two components with two different partners, then you will have to send to them separately. If it
yes,
is a single partner who is the engagement partner, then only to that single partner.
correct.
But
Yes,
I presume he is saying that there are two components and both have different partners, in which case you will have to treat them separately. And what difference does it make? एक email ही ज़्यादा भेजने का है ना आपको?
correct. If the holding company auditor opinion prevails, with ICI or NAFRA hold component auditors. Acha, will NAFRA hold component auditors guilty of misconduct?
Depends, na. I mean,
Yes,
yeah,
case to case.
depends on case to case. But if it is apparent that the component auditor's view was incorrect and the prevailing view of the holding auditor was more better technically, otherwise also, then obviously he is negligent. Now that negligence, if the component auditor view has sufficient backing, and it was really a very thin line between this view and that view, it would depend on that. But let's take an example. uh, there is an old item which needs to be written off, and uh, there is no evidence which says that it will be recovered, but still the component auditor says, no, I want to treat it good, and the holding company auditor says, no, I will provide for it. Now, if such matters are there, it will all go based on what is the evidence and what is the audit procedure and test and the result of audit test, based on which the component auditor has given his view.
Yeah. I think this is the last question. If principal auditors want to participate with component auditor while performing certain audit procedure, is it acceptable? That's what.
In a way, it is happening like that, though today it is happening little more remote. But I would not be surprised if they, I would not be surprised if they say, can I have one of my team member join your team? It's slightly far-fetched, but it's possible.
Happening now.
Yeah. Happening. Yeah, so Tejas is saying it's happening already.
I think we have
Yeah.
covered all the questions.
Tejas, anything from your side, because your experience is equally.
Yeah, I think uh, the presentation covered. So I think the by and large, what NAFRA or a regulator expectation per se is that just by sending a possibly a group reporting instruction seems to be not a sufficient audit procedure. I think they're trying to whenever there is a circumstances or whenever a suspicion arises, I think call for papers or discussion with the either holding company management or the management of the component would be necessary, because at times it may also happen that component auditors may not have a full information about certain matters, but if the matter is so material that it would impact my holding company auditors, then just by taking a view of an auditor that everything is okay, but if we feel that there is something which calls for a larger introspection, then I think one will have to go one step further, and some amount of analytical review procedures is something which is expected from
Yeah,
a holding company auditors. And in the process, if there is a need for a document or a work paper, and then that needs to be stressed upon, is I think what in a
yeah,
nutshell I could gauge from that
yeah,
circular. But having said that, in a large conglomerate, I think a lot of practical difficulties will arise in case of joint ventures or maybe an associates where the management of a holding company is not in a complete control of that thing. There would be a different kind of JVs where both would have an equal say in the management, and then getting access to information even from a holding company auditor or a holding company management would be equally challenging.
yeah.
So yes, there are challenges, and I think slowly and gradually, I think the practices would get developed. Possibly ICI and various other professional organization would come out with a guidance, need for an industry also participation, because I think presently the discussion is only among the auditing community, but I think the similar challenges which even an industry will have to face, because they may have to be exposed now to double audit in some matters, and
Yeah.
that would be equally challenging for them. So I think thank you,
Well
Milan bhai.
said.
The presentation was to the point, giving a directions, and I think few questions which can be covered as a form of a questionnaire was equally very crisp and to the point. I would request Deepak to propose a well-deserved vote of thanks here.
Thank you, Tejas bhai. Definitely I am privileged to extend a word of thanks. Just like group review instructions, Milan Bhai has given us API audit procedure instruction under SA 600, which has basically given us an idea about the acceptability about the new things, keeping the traditional approach at bay and being agile to the new systems where whether you like it or not. But this is the thing which is going to be there, and he was very clear with these things. And the way he has prepared the presentation and nearly covered all the queries and all the doubts, I think it's one of the best thing. And thank you for your time, Milan bhai. We extend a very warm vote of thanks on behalf of Chambers, all the participants. Thank you very much.
Thank you. Thank
I
you.
think, Milan bhai, if there are two questions, I think
Yeah,
which has
please,
just
please,
come.
please,
If
please.
you have a time, we can take it
Yes,
up.
yes, yes. I have another
I
10
think
minutes.
Deepak,
Yes,
you can.
I'll take it. In the interactions with component auditor, the group auditor could guess that component auditor has not understood the technicalities of the matters, and
Hmm.
therefore he has not carried required audit procedures. How does group auditor should deal with it?
So you'll have to either do a spoon feeding, or as you earlier said, he'll have to do the audit himself. So
Himself.
if the time is not available, that could be a practical challenge. You will have to either take a judgment to let it go for that period and correct it in the next audit, looking at your overall comfort. But if you're not comfortable, you will have to tell the management that please postpone your board meeting because this audit will have to be redone. And it is very bold statement to make to the company that you're not prepared for a board meeting, please postpone your board meeting. But you may have to do it.
In case of listed entity audit, under consolidation, in case 80% of the revenue is from foreign entity and it's not audited by us, so how to safeguard ourselves in this case?
Get it audited. Even if it is a cost, it's a cost. Why is it not audited? The only reason why it is not audited is the cost element. One is that it is not mandatory under law.
It's not audited by us. So they are saying it may be audited by someone else, but it's not audited by us.
Yeah, so you will have to follow then, sorry. So it is audited, but not by us. So you will have to go through the competency of that firm and all the rigmarole. And I think that's the crux, that why would something, and now in this case, obviously 80% operations are also outside. So this is a very unique and a typical case. Uh, but then ensure that the auditor who is selected has the skill, experience, capability, and you will have to constantly monitor, because your assignment is actually reviewing the work of that rather than anything else. Baki, otherwise consolidation mein there is nothing to be done, right? So you are actually auditing the auditor's work and then giving your group audit report.
Okay. There is one more query. If holding company shares evidence with principal auditor directly and principal auditor confirm it to the component auditor, can component auditors rely on the principal auditor's confirmation? First of all, holding company, if it's sharing an evidence in relation to component, then it's okay. Otherwise, the query.
Yeah, but even if it is regarding the component, what type of such information, unless, so is it, let's say, a balance confirmation from a party who is old, or the credit worthiness of the recoverability of dues or something like that. So let's say your money is stuck in a government contract, and it's an SPV which has built a bridge, and the holding company, through its obviously liaising and the contact, has got from the Ministry of Road or whatever, that this money will be recovered or the delays will be waived off and liquidated damages will not be applied. So if there are such related items, then there is I think it's a three-way discussion which will have to happen, rather than the evidence coming from the company to the auditor and from auditor to auditor. It should be a joint meeting. Yeah.
Really, it will depend on what exactly the matter is.
Yeah,
If
it's
it's
very
relating
difficult
to
to
going
answer.
concern, definitely you cannot rely.
Yeah.
Okay. I think we have covered all the questions.
Thank you.
Thank you, Milan bhai. And for the participants, I think we have kept another virtual meeting next week on 28 on key learnings from NFRA inspection. So I think do join and benefit from the session. Thank you everyone for joining, and thank you Milan bhai for taking out today's time. Thank you.
Thank you,
Thank
Milan.
you.
Thank you.